Okay, so that last correction that we and even half-hour charts showed that it was a bit deep, very mildly deep, but it showed that this is level 4. We can now do a good label. Okay, we know this is a higher degree 3, so there was of course over here a 1, 2, there is a 3, there's a 4. This is finally, we could maybe not, but we are about to see final level 3 into 3. This again could be an extension. Okay, and if that is going to be an extension, then we just have to add labels or counts as we move higher, and probably that is the most probable scenario. Okay, so what we want to do is add the counts, add the labels. All right, so this momentum plot merely indicates that we had a correction, intermediate term or short-term correction. That's a 1, 2. This is the 3, 4. Market's doing next time a 5 and a 6, a 7 and a 8 and a 9. Okay, so we can only do projections where this is going to go, and we are most interested in making an entry in this current run if we're not already in the market. If you're already in the market at 113.7, we want to hold that all the way to 119. We checked and talked about this several times. Do two things now. If we are not in the market, we'll see how to get in the market. Whatever we're buying when we get into, if it's first time to get in the market, you want to buy half a standard right away at these current levels. If not, if you're already having half a standard, we do not expect to buy until we get to 115. All right, let's take a look now and just the projections first. Okay, so you think this is gonna be a 9-wave move. Okay, you want to look at the most ultimate projections, 117.27. And higher than this is a bit obscure, of course, 121. Okay, but this is really what this is all about. At least I think 117.27 is realistic. All right, this is now an apparent growth projection because we are confirmed by this current plot that we are doing the right projection. We're doing right from level 2. There is a neckline here too. We're doing from level 2 all the way to level 3, projecting outwards. This is the first growth segment in the current cycle. It is part of the backbone of that cycle, and we can see that it is part of the backbone of that cycle. It did bounce at above 61.8. I believe it actually bounced at 78.2 to show strength. It did. So realistic target is 117.3. Whatever we're buying now and whatever we already bought, we at least hold to 117.3, and before we evaluate momentum. Okay, so we take out down our targets a bit instead of that 119, and after this target we're looking at 120, but that's a bit too bizarre, a bit too high. So with money on the table, I don't believe we will go further than 117. The next thing we need to do is segregate this current growth. You're looking at this so that you make a new entry. This is the origin of the current up move. You see you're bouncing again at the neckline. There's a 1, 2, 3, 4. We go on higher. We want to make an entry into this structure, and in order to do that, even today, Friday, no problem, we do make an entry into this structure if we get that opportunity. Now there's just two opportunities we're gonna get. Any kind of negative momentum on the 15-minute charts, on the 5-minute charts, we simply buy. All right, and the second opportunity is if we get to see momentum extreme on the 5 or 15. We have now momentum extreme on the 5, which is, so we have a projection here. We do projections. This is level 3 all the way down to level, this same neckline runs down a bit. This is of course an interior correction. This is short-term correction. There is a internal degree 3 here. What you're seeing is an internal degree 4, an internal ABC into degree 4. A has finished. It's gonna be a B. There's gonna be a C. Best entries are gonna be 117.8. You're looking, sorry, 113. Yes, 113.8. You're looking at 113.83 here, 113.73 here. There's just that's it, because we have a neckline at 113.62. So best entry is 113.8. If we get to see that, all right. Today, we do not commit higher than this, because so long as we're having this negative momentum, this is 5 minutes, this is not a cycle extreme. Okay, usually we would just buy the levels and then the level of 113.8 and then check for confirmation on a cycle extreme on the 5 minutes or 15 minutes. So we don't have any negative momentum on the 15 minutes, but we do have on the 5. It is not extreme negative momentum, it is just normal negative momentum. So this is still going to do an extreme. That extreme is going to take us lower. It's probably going to be 113.8. So if you want to join the market again, it's going to be 113.8. If we're already long at 113.7, we hold. There's really no problem. This is a long-term trade, and we already talked about it several times. So we know that we're going to be holding corrections. Okay. So we were long. We were long. I expect actually we were long at 113.3, and here is showing at 113.4. Over now we have an opportunity to long at 113.8. all right, if we're long at 113.7, we're having a stop at 112.2. we worked that out yesterday. The risk is just 6% and 7.5%. we're going of course to 119.4, and most immediate target is going to be 114.7. I think this is just about to be seen next week. We're going of course now for 117.3 and 119 and even 120. We just check the targets. So if you're not long, you would want to get in at 113.8 with that same stop, 112.2. we did this yesterday. We were long at 113.7 with a stop at 112.2. this is 150 points. 150 points multiplied by half a standard is $750 less, because the point is actually 91 cents, but let's just say it's $750. we expect or believe it is worth it, because of course if you're going to 119, half a standard will yield around $3,000. we will get opportunity to add to that half a standard as we move higher into above 115 or into 115 levels, and also 116 levels on the belief that we're going to 119. So we could be carrying a standard by then in order to try and get a yield of about $5,000, maybe more. So we have to start with a bit of a bigger size at this current levels, at least half a standard, if not slightly more. The stop is going to be 112.2. we have risk contained at 7% to 8% at the most on a $10,000 account. We're going to 117.25. we just checked that now, and 119.7. this is a delayed 5-minute chart as of yesterday. It is probably really the same because we just did higher levels. We're just doing heads and shoulders. We all know how to gracefully get out now of that position in which we are accumulating longs. If there is a serious stop out, we're going to be seeing negative momentum on the 1 hour, and then we can identify the head and the relevant shoulders beside that head, so that we can actually add to our position if we have that ability, and go out on a lower average at the right shoulders. Right shoulders should be always about 50 or 61.8% of the distance from the neckline to the head. Now from that recess, okay, so there doesn't seem to be any questions or revisions. Okay, we seem to have covered, we have now covered all the issues. Okay, so there doesn't seem to be also any issues that need revision. All right, so that brings us to the end of our analysis. Don't forget, it's always good to get into that position, sizable. United States dollar against this yen, against the Japanese yen. If we're able to get that even today, end of the week, we're looking at, we can still get a degree C all the way into 113.85. all right, so to recap on what's been going on today, if we are in money on our cryptocurrencies, we would want to close out positions, especially on Ethereum, and get the money in. All right, there will be better entry opportunities next week. With Bitcoin, we have to work our risk very very tight, and we have to be very sure of the exact risk that we're holding across the week. It should not be more probably than half of our standard size, or our normal size, that's what we mean, or 1/3. It's true that we expect Bitcoin to go into 63,000 and 64,000, maybe even as early as the weekend, but we still can see very strong volatility, adverse volatility, that we have to be prepared for. We expect to start buying, parking money into dollar strengths. There should be a dollar uptrend as of coming months of November, and we have to be prepared for it. So we would start acting by beginning to park 1/4 of our account size long United States dollar against the yen, what we're looking at here, and the United States dollar against the Swiss franc, and short the euro against the United States dollar. Finally, we expect that sterling against the dollar is about to reverse, so we'll look very closely at that as of next week. It's possible that we can engage shorts at small lots or small sizes today, Friday, end of the week, at 1.3770 and 1.3760 around current market levels. All right, then, it's been really great having everyone with us. I wish everyone a very wonderful and splendid weekend with their family and loved ones. Also, to all the very best of good health and